So now we're going to move into the next stage of the infrastructure development across Africa, where we're going to be looking at fueling Africa's infrastructure growth, alternative funding, because without that funding, can't move all the other goalposts. And so we're going to be looking at impact investing and green bond offering in innovative ways to fund sustainable projects. And leading us in this discussion is Chipo Muwowo, who is the founder and CEO of Allocator Media. Thank you, Chipo.
Thank you. Thank you very much. Can you hear me clearly? Great. Thank you. Capital Markets Africa Media is the old iteration of my business. Allocator Media is the new iteration. And basically, I'm a storyteller, I'm a financial journalist, and I run 2 media brands. Allocator Media involves talking to capital allocators about how they're investing right across the African investment space, from private credit to real estate, infrastructure. I have a podcast, so I do that primarily on African Allocator. And then I do African Stock Hunter, which involves highlighting African listed companies that are interesting and worth looking at, uncovering, unearthing companies from that space. Again, I do that via a newsletter that goes out every week. But today's not about me; it's about these guys and this conversation. Fueling Africa's infrastructure growth, alternative funding. I'll ask them to each introduce themselves. 20 to 30 seconds. Tell us what you do, where you're from. Tassius, we'll start with you.
Thanks very much, Chipo, and thank you everyone for attending this afternoon. And my name is Tassius Chigariro. I have the privilege of sitting at the holding company of Old Mutual Namibia, a 180-year organization that has also got the longest running manager of unlisted investments in Namibia. A beautiful country. If you have visited it, like Hassan has shared with me, you agree with me, it's a wonderful country. And Lionel Kanamea, sitting there, my colleague, actually runs the unlisted portfolio. And we formed this more than 20 years ago to solve social and economic issues in the country that needed development while delivering great commercial returns. And I hope I can share a little bit with you later in this conversation.
Thank you, Chipo. Good afternoon, everyone. My name is Hussam El Qasim. I'm the president of EQ Developments. I'm Jordanian by nationality, but I'm based in Abu Dhabi. I'm between the UAE, Ghana, and Nigeria. We specialize in developing real estate, industrial, and infrastructure projects in few countries within the continent. One of them is Namibia as well, the beautiful Namibia. And when we first started, we started in the amazing Nigeria. So I'm glad to be here with you, and let's chat together.
Thanks, Chipo. Hello, everyone. I guess we're a bit tired right now because it's the end of business day. I'm Femi Bewaji. I run a supply chain logistics company. I'm from Nigeria. We have subsidiaries here in the UK and also in America. We've been doing this for quite a while, and we all can attest to the fact that without effective, efficient supply chain management, there's no infrastructural growth in any country. That fuels the industrialization of every country, and we are at the forefront of making it work in Nigeria and extending the product that we have in solving solutions around the world in Africa. Thank you.
Hi, everyone. My name is Kito, and I work at Acre Impact Capital. So it's Francisco, but Kito for short. I work, Acre is a impact investment fund manager, and so last year we set up our specialized export credit fund, which is entirely dedicated to financing climate-aligned and essential infrastructure across the African continent. So me specifically, I look after the origination, structuring, and execution of our export finance fund investments.
Thank you. Femi, let's start with you. You're a logistics entrepreneur working in Nigeria. Talk to us about some of the challenges you face as you come up against infrastructure within the countries that you operate. What are some of the challenges you face in your day-to-day operations as a business?
Yes, for Nigeria particularly, right? We all know that Africa has a huge infrastructural deficit because most of the infrastructure that we have in Africa has most likely from the independence days That's when, and they've not been updated or improved upon. But right now, everybody is focusing right now in Africa. There's a lot of investment coming into Africa. China-Nigeria relationship, China-Africa relationship is actually pushing a lot of infrastructure development and growth. Hence, Africa is still the gold mine where most of these developments are ongoing. So yes, we had some bottlenecks in carrying out logistics operations because of inefficiencies of port operations, the road congestion, the road network, and also the equipment and the things that we have like that running in Nigeria. So at this point, these are challenges that we are continually trying to navigate our way around. We try to solve some, but some still remain unsolved. But with what we have in mind and what we want to implement, we've seen ways we can actually find a way around navigating all of this and provide the right solution for some of the customers that require most of this and keep doing business in Africa.
And you kind of serve, you tell us about the companies you serve. Typically are they multinationals or domestic businesses?
Yeah, so we provide this logistics service to all kinds of clients, governments, all industries in the mining, gas, FMCGs, and all, like it's not limited to anybody, right? But most of these clients still require the same thing. They want their shipment moved from this part to this part. So we are just at the focal point in making sure that any form of infrastructure development that is required in Nigeria, we are well plugged to have the shipment delivered to them in due time and in the manner and the scope that they expect it to get to them.
Yeah. Tassius, before we talk about alternative forms of funding, that's the theme of this session. Can you give us a flavor of the more traditional forms of funding that Old Mutual has used in Namibia, and maybe give us a flavor of the types of infrastructure projects that you've been working on?
Yeah, we have done a number of infrastructure solutions, but before I get there, just interesting to pick up from Femi's. The story of Africa is very similar everywhere you go. We have challenges, we have infrastructure deficit more than anyone else in any other continents. And the challenge is that investors see the challenges more than the opportunities. And 20 years ago, we chose to become the leaders to see the opportunity instead of the challenges. And Africa has a medium age of 19. Its leaders have a medium age of 63. And that gap, you can also find it in the leadership and the future. And what we did at Old Mutual Namibia is to start deploying the capital that we are custodians of, which is pensioners' capital. Pensioners are the longest investor you can ever find. And they have a 50-year horizon. They are patient. They also want great returns. And so we are the largest custodian of pension fund money in Namibia. And we started by ourselves by deploying that capital into infrastructure. We have started with the normal socio-economic needs such as housing development. We went into commercial real estate. We have progressed over the last 10 years into solar power, into windmill, which is my favorite one. And we're looking into water sanitation now. So there's a number of them that we're doing. And what excites me most about this is, I've always said this about every investor, as much as they want returns, they want the joy of doing an investment that benefits society. And we are such an investor where we do things that develop communities, that touches socio-economic needs, yet we produce great returns.
Hussam, you've been in business for 23, 24 years, roughly. How has the nature of infrastructure financing changed, over those years? And I also want you to touch on blended finance, which you have some experience in, I think, in Ghana. So how's it changed over the years? And talk to us about blended finance.
Definitely. It has changed. When I first went to Nigeria in 2008, we did face challenges in raising capital for a water scheme in the eastern parts of the country. It took us some time in order to manage and de-risk the project as much as possible, raise the required capital through a public-private partnership. Surprisingly enough, at that time, back then, the state government we were operating at did not have proper PPP framework that would guide the materialization of that transaction. So we had to wear two hats. The hat of the private party that was helping in preparing the project, and at the same time discussing the framework in capacity building with the public sector in order to have a proper framework. Today, Nigeria has changed. Today, Nigeria do have a proper PPP center that governs all projects on a federal level. For the part of blended finance, let me first differentiate, and this might be somehow people cannot tell the difference between public-private partnerships and blended finance. Blended finance is more a mechanism to attract the private money into projects, whereas PPP is the partnership between both parties. We did work on a number of blended finance deals. One of them, for example, was in Ghana. When we deal with blended finance, we usually follow a certain process, a process that starts by identifying. Let me first clarify, blended finance is mainly to strengthen the project's impacts, de-risk the project, and attract private capital. We usually identify the project from the beginning. We make sure it is commercially viable. We make sure that it does have proper socioeconomic impacts for all people surrounding it. Based on that, we start identifying the best ways to maximize those benefits. We identify the risks. We try to mitigate the risks and have a proper plan to de-risk them and come up with proper solutions in order to attract the private finance. This happened, for example, in our glass factory in Ghana, the Gihok Aboso glass factory, where we identified the socioeconomic benefits surrounding this project. We are rehabilitating a full town. We are creating at least 280 direct jobs. We are pumping around $10.4 million into SMEs, supporting the factory itself. From there, we identified the risks as well. Could be the currency risk that made us go into to deal with Mega and to use their tools to de-risk such a thing. We managed to de-risk the issue of off-taking by securing off-takers agreements from the Ghanaian government, represented by Gihok Distilleries. We applied for tax waivers in order to minimize and reduce our cost. From there, we managed to attract the private sector in order to invest in this project.
Mm-hmm. And when you say the private sector, what kind of organizations, joined in investing?
One of them is the Social Security in Ghana, SNIT. So we managed to have proper discussions with SNIT, and right now we are having them on board as equity shareholders in this project. And this is an example, the proper example for blended finance, where we have SNIT, an organization from the Ghanaian government, being part in covering the financing gap, and that's when Afro-Exim Bank, African Development Bank, IFC, they all started approaching us in order to provide the proper debt for this project.
Yeah, that's interesting. Kito, we're going to talk about export finance for sovereign infrastructure development. Now, when I've thought of export finance in the past, it's often been in the context of businesses needing that finance into trade internationally, but you're using that mechanism to support sovereigns who are developing infrastructure. Do you just talk to us about how it works and give us some examples of what you're doing there?
Yeah, sure. I'll start high level of why we as a fund really like export credit, and then I guess give a few details on how we actually structure our investments. So overarching, as an impact fund, we set up an export credit fund last year, and it's quite unique because it's one of the only funds which is entirely dedicated to working with the ECA ecosystem to finance infrastructure in Africa. So that's all we do. We lend into ECA-supported transactions. And as an impact investment manager, we think export credit is a great delivery mechanism for financing the type of projects that we and our investors want to be a part of. So if you look at the mechanics or what's involved in an ECA support facility, you have a clear segregated use of proceeds. So there's a disbursement mechanism to make sure that every dollar that you're deploying goes to actually funding the project. You're working with well-established and robust ENS processes to manage the sort of ENS risk in a transaction. You're working with banks who are signatory to the Equator Principles. You're working with OECD governments and following IFC performance standards. And equally as important, you can generate very good commercial rate returns, because a lot of times people think an impact fund is a concessional lender. And investors want to come into the fund for various reasons, impact or commercial, and we don't believe you need to segregate. We can deliver both. So from a borrower's perspective, it's also a very useful form of liquidity that you should have to complement your capital markets programs or your existing bilateral or syndicated lending, right? So because there's an export credit agency guaranteeing a large portion of the debt, that affords borrowers longer tenors on their loans. The disbursement is made in a way that it's tailored to specific milestones. They don't have negative cost of carry. And you also have, when you calculate the all-in financing cost of an ECA support financing package, it's usually double digits below the equivalent bond benchmark. So those are the reasons we like it, and we've decided to focus on it. Now, if you look at the ECA market as a whole, it's about 200 billion, give or take per annum. Somewhere between 10 and 15% of that is in Africa. But it's largely funded by international banks. So our whole goal for setting up the fund is to make this a more investable asset class to a wider set of institutional investors. So the consequence of what we're trying to bring to the market through this fund is hopefully you can have additional liquidity and new pockets of liquidity. So not only through banks and the usual institutions they syndicate to, but now through a fund mechanism, you can start having high net worth individuals, impact investors, certain DFIs who normally wouldn't be able to align their mandate if they came on a deal directly. It's mainly a convergence mechanism to sort of grow this pool of liquidity, which delivers the type of projects we want to invest in. And how we do it as a fund, if you take a step back and you look at how an ECA-supported financing is structured, you will have two components to the debt. You will have one loan, which is typically larger and longer, usually about 85% of the value of a project, that's guaranteed by an export credit agency. You will have a second loan sitting alongside it, which is smaller, usually the remaining 15%, which needs to be in place. It's to fund a down payment requirement for the project to be able to unlock the larger loan. Most banks are happy to lend on the larger piece if it's covered by an export credit agency. More recently, you've seen a lot of banks less willing to lend on the piece that has no type of risk mitigation, or they'll do it if they can find a way to hedge it or sell it. So that's where we come in. We lend into that portion if there is a gap. Most often than not, if there is a project that stalls, it's because of lack of funding for that tranche of the financing. So by lending into that, we can try and unlock, $5.6 of private capital and then hopefully move projects ahead. So the whole fund is structured to just lend into those projects where there's a financing gap that's delaying or stopping projects from going ahead.
In many ways, it sounds great. De-risking projects is always a good thing. What have been some of the challenges you've faced as you've been involved in this work and trying to bring these agreements together?
So some of the challenges are the typical challenges that banks will face, because banks are the sort of the lifeblood of the ECA market. They arrange and they sell and they structure, and they're very good at it. But usually one of the challenges you'll face if you're a bank trying to sell or invite investors, non-traditional investors, into a transaction is it could be down to mandate alignment, for investment format requirements, timing, if you need to get a deal done really quick. It could be you're speaking to an impact investor in New York who just has never heard of export credit before. So by putting it into a fund format, you try and address these challenges initially in the due diligence process of bringing your investors in. The end result of that is we then have delegated authority to act and invest quicker in a format that's aligned with the rest of the market while meeting their requirements behind us. So a lot of the heavy lifting, I think, is in the due diligence, and then in the actual transactions, I think it's a long gestation period, because first a government has to decide what infrastructure they're going to build as part of their national development plan. Then you need to tender a project. Then as a financier, you need to make sure that you're backing the right contractor. And then, in that 1 or 2 years, you need to make sure that priority 1 didn't become priority 10, and you could have a change in government. So all these things are factors that lead to, you have to follow a lot.
Yeah. No, that's really helpful. Thank you. Femi, just coming back to you, when we spoke 2 weeks ago, you were saying that you're planning to develop some of your own infrastructure to help, plug some of those problems that you face. How are you seeking to fundraise for that? Who are you looking to? Do any of these solutions we've discussed sound attractive in any way? Just give us a sense of what you're thinking.
So for us, what we've seen is, like I explained earlier, the inefficiencies of the port's operations, the physical infrastructure, and also digitalization that we've identified as a major problem in Africa, because most of the chains, the value chains, have not been digitalized in such a way that you can have that go seamlessly. And that's actually the engine room of any infrastructural growth, as earlier said. And backtrack to what I said about China. China is very big on increasing efficiency through digitalization, and we've had to partner with how can we incorporate the system that is applicable in China also down here in Africa. Hence, we are building the first of its kind AI-powered digital logistics solution, where this integrates directly into a working physical infrastructure. So we are at a point where, for numbers' sake, Africa is a $1.3 trillion market in terms of trade-related activity. Nigeria alone has about $60 to $50 billion. We recently did about $2 billion in the last 3 years in terms of volume of shipments, and in terms of analyzed revenue that we also generated almost $10 million. So we are looking at it from a place of how can we take more stake in the value chain. So essentially we're trying to solve real problems that our customers they are requesting for us to solve. They are saying, why can't we just guarantee them predictability? They should be able to get their goods on time. They should be more reliable. It should be trackable. And all of this has to do with digitalization and a good existing physical infrastructure. So that's what we are trying to solve. That's where we are right now. We've already rolled out the first MVP of the product from the last mile delivery. And this covers end-to-end, door-to-door, from the country of origin down to the final doorstep. So we are building from ground up, where we started with the last mile in the digital part of the product. And on the physical part, we've also identified like a very good space in terms of strategic location for commercial viable operations. It's going to be like a trade ecosystem where all of this can work for selected clients that are particularly going into infrastructural development and don't want any downtime in having their supply chain needs met. And this is also scalable across other countries in Africa. So that is how we are trying to solve it right now. As regards the kind of investors that we are looking at for, ideally, we are well positioned for a strategic M&A. The global logistics player looking at strengthening their presence in Africa. We are well positioned for that kind of synergy coming up in the nearest future. But ideally, we're also looking for PE in terms of PE investors, as those are strategic investors that will understand what we're trying to do, and also the kind of market share we are going for in Africa.
Yeah, no, really interesting. We haven't spoken about green bonds. Does anyone have a sort of view or some experience in that particular sort of financing mechanism? Any experience?
We don't have much green bonds in fact, we don't have green bonds in Namibia, but it is one way that makes it a lot easier for foreign direct investment to come into country, because most of the green bonds are a form of standardized de-risked opportunities for investors to come through. And it's something that we are going to look into seriously to get more money come into our nation, because we really have some great projects that needs to be explored.
Yeah, no, fantastic. Yeah. I've got a last question, and then we'll open to the audience for Q&A. This is a question for each of you, so I'd love to get your view on this. As you look ahead to the next sort of 5-10 years, what are you most optimistic about as you think about your particular area within the sort of infrastructure ecosystem and this question of financing? Maybe Kito, if we start with you, then we work our way down.
I'd say what I'm most optimistic about in the ECA specific ecosystem is finally seeing a bit of change. So ECAs aren't new. I think the first one was the UK's in around 105 years ago. And since then, ECAs operate via a very strict set of rules to make sure that all the OECD ECAs play by, or have the same playing field and have the same rules, so that no one ECA decides to give sort of concessional terms to support their country's exports. And those set of rules haven't changed for ages. And I think it's only in the last set of 3-4 years where we're seeing ECAs revisit the rules that they've set, especially those that are maybe not really applicable in today's environment, looking at offering longer tenors, changing their classification. So that opens up not only a whole set of liquidity from banks, but also from potential investors. So it's not even the pace of change, it's just seeing sort of a bit of change, which is a bit encouraging.
Yeah, for me, I think funding in Africa is beginning to change. In the area of investors are beginning to understand certain things they didn't used to put into consideration before. As we've seen that there's no one-size-fits-all in terms of the region that plays a role in the type of template that is required, and also the industry also plays a role. So we've seen a lot of investors putting their skin in the game, coming on ground to see how things work and how they can actually invest in those, which is the way to go for Africa. Yeah, very optimistic about what the future holds for Africa. Africa is the only continent that is behind in terms of infrastructure right now. So all attention is on Africa, and the projections are there to see Africa scale its infrastructural growth within the nearest future. So those are the positives we'll get out of it. So that's a lot of opportunities for us here in Africa.
I would love to see the investments coming from within Africa itself. There is a lot of money in the continent. There should be proper mechanisms in order to exploit this kind of investments from within Africa. Digitalizing investments, such as tokenization, for example, this new thing that is surfacing up. It's a great option, but do we have the proper infrastructure in terms of connectivity for a mass number of people to invest in these projects? That would be something great to happen. We look forward also to raising capital again from institutional organizations within the countries in Africa. Last May, for example, the president of Ghana issued a decree that at least 5% of government organizations, such as the Social Security, should be allocated for development projects and for VC projects. That is something great. So yes, we would love to see more investments coming from within the continent rather than from attracting it from abroad. And that's how things will start trolling.
Myself as a Southern African, and I've worked in 3 Southern African countries for many years, Zimbabwe, South Africa, and Namibia. And one of the things that excites me the most, I've got a couple of things, is this conference has been quite a mind-blowing for me, because there is a lot of interest in Africa beyond what I've thought. And I think investors are looking for value. They have been scared for a while about Africa, but I think they are starting to see that there are ways of extracting value while you're mitigating the challenges. And finding partners like ourselves, we have got a good track record, a brand to protect. It's important because you need to get it all right from due diligence, right from the beginning. You need to get it right at the operational stage. You need to get it right even at the exit stage. So finding the right partners, I say to the investors, if you find the right partners, you can extract value out of Africa. Sure. Africa is also, the second thing that excites me is Africa is waking up. I mean, the Stone Age didn't end because we ran out of stones, but it's because the world discovered better ways of doing things. And Africa is waking up to realize that the fact that we missed on a Stone Age, we shouldn't keep looking for it. We should move on into the new world. Africa is waking up to green solutions. And I can see a lot of them coming through. Africa is waking up to innovation, and I can see all that coming through. So I'm excited about the future of Africa. And I was in a presentation just before here about a Zimbabwe presentation. 30 years ago, it would be about tobacco. And I woke up there and I was surprised. It is about blueberries. They've moved on from this toxic thing to a healthy world. So Africa is waking up to more modern solutions to the needs of today. So that's why I'm excited about Africa. And I hope the investors are excited too, and they can find the right partners in Africa.
Fantastic. That's a great place to stop. We're going to have 10 minutes for Q&A. So if you have any questions, just raise your hand and there'll be a roving mic. Yes, any questions? Yeah.
Thanks, Chipo. Great panel. I'm Craig from Africa Legal, a magazine for the African legal profession. Touching on some of the things you did, and especially the last comment you made, Tassius, and others about innovation, we've seen, especially in East Africa, but across Africa, that Africa has managed to leapfrog technologically in things like mobile money and others because they didn't have the infrastructure that Western countries did, so they actually leapt above it. I've spoken to some people in Nigeria recently who think that the same can be coming for infrastructure. Can you see ways that Africa could leapfrog in infrastructure rather than just trying to fill a gap compared to what other countries already have?
I can give a short answer if I can. As necessity is the mother of all inventions. It will surprise you about how much stuff we have innovated in Africa that we are doing that is just not commercialized. And so we want to see the big investors come and commercialize our survival means that we have already with innovation of the things that we are doing in country. But the challenge we have in Africa is to find a way of standardizing that to become great. Somebody says M-Pesa was so successful because of lack of regulation, actually. And if it was over-regulated, it would never have started. So in Africa, we have got these great ideas, and they are not well-regulated, they're not well-polished, but we like the investors to come and see how we can expand these great ideas that we have.
Any comments on his question?
Just to add to what he said, I think that's absolutely right. Like, there are very raw materials that are yet to essentially be bosomed in such a way that you can actually see the global limelight. Like, for example, China is very self-sufficient in whatever they do. They don't interact with the world with the WeChat and the WhatsApp group that we use here, right? And that's what they use. And they've made it a super app in such a way that it's sufficient for them because the population is power, right? And Africa is what it is. We're most likely one of the most populated continents in the world. We can provide solutions for ourselves that we can actually use. That's why, to buttress on the point of the African continental trade, and to add to what we've seen, we should probably start doing things that benefit us as Africans. And then the world can actually see that this is working within Africa, then take a liking to how they can bring it globally, right?
Can you leapfrog infrastructure? Can you leapfrog having roads and ports?
But you also don't have, in a way, sometimes one of the difficulties, if you have stuff before, is the new stuff you build has to be built on those foundations. So for example, if you're thinking of solar, so some countries in Africa have really great renewable potential from solar. And if you look at the UK, one of the issues you have in the UK, if you're generating renewables, is not necessarily the generation, it's the transmission. The grid's is not done in a way where it makes it optimal. Whereas in some provinces, what we're building solar power plants and battery storage facilities, and transmission lines, you're starting from scratch, so you can make sure that for that specific province, you have the correct grid, the correct infrastructure. And if you're looking at railways, so railway connectivity across the continent is not great, but you have now several projects in the east, the west, connecting corridors down south. And if you're not reliant on an existing rail track or upgrading rolling stock or anything, then you have a blank slate that you can focus on and using the best, most efficient technology that you can afford, opposed to trying to have to do something, upgrading existing infrastructure.
In 30 seconds, I'll say, you said, can you lift roads? Namibia is voted to have the best roads in Africa, maybe 90% of which are not tarred. And if you want to get a great way of making untarred roads that are the best in the world, come to Namibia. And,
yeah. Any more questions from anyone? We've got 5 minutes. No, it's your last chance.
sorry. No, it's not.
Okay. It's been an interesting session, and I've really enjoyed it. And I really appreciate you guys making the time for this and sharing so generously with us. So let's give them a round of applause. Thank you.